Thank you very much, Eunice. Let's bring in CNBC contributor and Longview Global's Dewardric McNeal. He is the firm's managing director and senior policy analyst. What do you make of what's been going on in China generally, but specifically with the put in context this China Development Forum and the presence of U.S. executives there?
Good evening, Tyler. Thanks for having me. Look, I think broadly speaking, post-National People's Congress, we're trying to see whether or not Xi Jinping is going to be able to really focus on security, which we think is what his real focus is, while also trying to bring the economy back to some level of stability. And the verdict is still out on whether or not he can do both of those things simultaneously. With respect to China Development Forum, to Eunice's point, it's a much more muted affair this year, but it is notable who is in attendance, Tyler. And most of the CEOs that are there have a real heavy reliance on the Chinese market to sell their goods and services, or they are really looking to push China forward with the opening and developing of its financial services sector, so wealth and asset managers. And so far, most of them seem to think that they can manage the geopolitical risk as well as the potential reputational risk by being there in China, Tyler. And if I were grading visits by CEOs, I would have to give Tim Cook, Apple's CEO, an A+ on the way he's handled his visits. He's done nothing to dissuade the U.S. from believing that he's going to de-risk his supply chain and look to manufacture some stuff outside of China, while in his words, continuing that symbiotic relationship that he's had with China in the past going into the future. So we will see how this all plays out. It's a dance that both sides know that they have to do.
He's in an amazing position because, number one, he's got a company that derives, I think it's 20% of its revenues from retail sales in China, number one. Number two, they are the biggest manufacturer of his flagship product. So and yet he's running a U.S. company at a time when U.S.-China relationship has probably never been this fraught, at least in a generation.
Yeah, you're right about this, Tyler. Look, he's been doing all the right things with respect to his Chinese customer, visiting stores and taking selfies and all the things that he needs to do to really keep that iPhone popping in China the way that it is. But to your point, it's a delicate balancing act. But he is showing what perhaps the China plus one strategy can look like. And so we'll see how it goes in the end. But so far, he's managed to walk this tightrope.
Julie, you look like you're trying to get my attention. Did you want to ask a question or jump in?
No, I was curious what you think that what kind of groundwork Tim is trying to put down in terms of being able to, drive more with the consumer, but also continue to have strong supply chain relationships in China.
Well, I think this is really about looking at where he can get the Chinese to help solidify the supply chain in China. But still, he is very intent on de-risking that supply chain as much as possible. India, Southeast Asia, other places. So again, what we're seeing, I think, is a strategy here of trying to reassure China while also trying to de-risk. And again, I don't know if it's going to be successful in the long term, but it certainly seems like his primary play on this visit.
Dewardric, thank you very much for being with us. We are always grateful, and you provide great insights. Thank you very much, Dewardric McNeal. Let's trade this one. How investable is China?
It depends on what your timeline. I hate to sound very cliche on this, but it depends on what your timeline is. And Dan brought it up before, the zero COVID policy. Everyone thought it was going to be gangbusters once they got back at it. We haven't seen that, and it seems as though China could turn the spigot on and off whenever they want. So I don't think it's for the faint of heart to put money into Chinese markets right now. I'd rather be with things that have a pseudo dependency on China versus a direct dependency.
If I were persuaded that I really wanted to be in China, what's the best way to do it? Is it a fund? Is it an ETF? How would you do it? How would you tell people to do it?
I would just go, yes, with ETF, because, I mean, who knows who's the actual target, right? Sometimes they just target one particular company to send a message to other. Do you want to take that risk or not? It's sort of, to me, like...
In other words, if I were to buy a ByteDance or a Baba or something like that, I'm hung out there if China decides to target them.
Right. But if you
safety in numbers.
Yes.
All right.